October is not usually a month for big dividends, but in this video I'll reveal all of my passive income this month. I'll also reveal how much I've won in premium bonds, and if you stay to the end I'll discuss which companies I've been buying and selling, including a FTSE 100 company I've bought for the very first time. I've been dividend investing for the last 14 years, mainly in large UK companies which we are all familiar with. My first target was simply to generate enough passive income to afford just one humble cup of tea a day, but I didn't stop there. What else could I afford if I just carried on investing any spare money I had left over each month? And what if I tried to forget about the constantly fluctuating share prices, or even the actual value of my portfolio? Could I eventually generate more passive income than my full-time wages from a relatively ordinary job in the education sector? Let's first go back in time to 2009, the year it all started. In the October of that year, I received absolutely nothing. I had started in the January of that year, but dividend investing takes time to gather momentum. In the following October, things started to happen when two mining companies paid out £20. A year later in 2011, these same companies paid out £30. It was so motivating seeing the payments rise like this. Some people say dividends are pointless, but to me they weren't. It felt like I was the owner of a business being paid a wage for doing nothing at all. I simply could never get this same feeling if I were to invest only in growth stocks, and I would have given up years ago. To me, the motivational aspect of passive income automatically flowing to me from the profits of big companies is a powerful one, which I'm just as enthusiastic now as the day I first started. Let's return to 2023 to see where we are today. This is not investment advice, and you will clearly see from this video that share prices can fall as well as rise. I'm simply showing you my own journey. On the 3rd of October, I received some cash from Croda International. This company specialises in chemicals and dates back to 1925. The shares have had an awful run this year, down 38%. The dividend yield is 2.7% spread over 2 payments a year. Although this company is having a pretty bad time at present, the dividend history is robust. Croda is one of those companies which has a track record of raising its dividend year after year. This month, Croda paid out a total of £60. To see how much I hold in each company, then I've listed the totals in the video description, along with some offers which could save you money. On the 5th of October, I received some dividends from Aviva. Aviva is a multinational insurance company based in London and has 18 million customers across its core markets of the UK, Ireland and Canada. The share price is down over 11% this year. The dividend is fairly high at 8% spread over 2 payments a year. Dividend history is a bit patchy, and Aviva is in the financial sector, which can be rather volatile. This month I received a total of £155. Also on the 5th of October, it was the turn of Haleon to reward its shareholders. Haleon used to be part of the pharmaceutical giant GSK, but was spun off as a separate company last year. Here are some of the brands it owns. The shares are up nearly 4% this year. Haleon has only recently started to pay a dividend, but this should hopefully grow over time. This month Haleon paid out a total of £30. If you find these videos useful, then please remember to tap that like button as it really helps out the channel. On the 12th of October, I received a present from GSK. GSK is the 10th largest pharmaceutical company in the world. Because of the Haleon demerger last year, GSK is now a more streamlined and focused business. The share price is more or less unchanged this year. The dividend yield is 3.8% spread over 4 payments a year. Dividends have been fairly stable over the long term, with a slight fall recently because of the Haleon demerger. This month I received a total of £150. Also on the 12th, I received a cash payment from Diageo. This global drinks giant produces a range of well-known brands. Guinness, which was first brewed in 1759, is currently the most popular beer in Britain, with increased sales of 19% year on year. The shares are down 14% this year. The yield is 2.6% spread over 2 payments. Diageo is another one of those companies which consistently increase the yearly dividend payments, a very good sign indeed. So do you think that now is the time to snap up some Diageo shares? Let me know your views in the comments section. This month Diageo paid out a total of £360. On the 19th I received dividends from IG Group. IG is a UK online trading provider which allows traders to bet on the direction of equities, bonds and currencies without owning the underlying assets. The shares have had a bad year so far, down over 20%. The yield is high at 7.3% spread over 2 payments a year. Dividend history looks encouraging over recent years. This month I received a total of £180. Now I know what many of you are probably thinking. What is the point of receiving all these dividends when the share prices have plummeted and I may have lost thousands this year in the value of my shares? So far this year the FTSE 100 is down 2% at the time of this video. The FTSE 250 is down 11% and the FTSE All Share is down 3%. Let's take a look to see how my own portfolio has performed this year and if it's also down. At the start of the year the value was just over 359,000. At the time of this video it's 395,000. 22,000 of new money has gone in, leaving a gain of £13,779 for the year so far. You can also see here that I filled my ISA allowance of £20,000 and therefore any extra money is invested outside the ISA, but I make sure I buy very low paying dividend shares outside so that I don't go above the unprotected dividend allowance, which is £1,000 of non-sheltered dividends this year but dropping to £500 next year. And now for premium bonds. The yield is around 4.65%. There is one draw a month. You have easy access to your money and there is a chance to win £1 million each month. All winnings are tax-free. This month my prize total was £150. This bar shows what I would have expected to win in the first 10 months of the year with the full 50k invested. And this bar shows how much I've actually won. It's been a great year so far, but not every year would be as good as this. I use premium bonds as my emergency fund, so hopefully I never have to sell my shares and can allow them to compound over time. And now for the overall monthly summary. The green bars on this graph show my monthly passive income for the first 10 months of last year, and the blue bars are for this year. The total passive income this month was £1,085. For the first 10 months of last year, the total was £12,695. And this year so far we are up to £15,425. It's very motivating to see these totals go up year after year. This graph shows my average monthly dividends since I started my journey in 2009. I make sure that my dividends get reinvested so that even more dividends are generated the following year. At the time of this video, I'm generating an average of just over £1,200 a month, and this does not include premium bonds. This is just share dividends, and because I make good use of a stocks and shares ISA, every penny is tax-free. I'll now try to achieve my next target of an average of £1,300 per month in share dividends. Each £100 a month increment should take a shorter time to reach as the power of compounding kicks in. I'll shortly be revealing my purchases in October, including that new company I mentioned. But first, a quick look at the FTSE 100 ex-dividend dates for the month ahead. Just 4 companies go ex-div in November. If you own the shares before this date, then you're entitled to the dividend, which will be paid to you on the payment date. As an example, if you own shares in Bunzl, which goes ex-div on the 16th of November, you will receive 18.2 pence for every share held, and this will be paid to you on the 3rd of January. And now the payment dates for November. I'll be expecting payments from British American Tobacco, Tesco and BAE Systems. Here are the highest yields, with Phoenix Group leading the way at over 11%. With higher yields there is always a danger of a dividend cut and a likely share price fall as investors become worried, something which happened to Barratt Developments earlier in the year. The average yield of the FTSE 100 is 3.9%, and you may find it surprising that the yield of my own portfolio is actually lower and is currently around 3.6%. So what have I been buying this month? Well, I've added more to my S&P 500 ETF. This gives me exposure to 500 of the largest listed US companies all in one share, and the ongoing charge is incredibly cheap at just 0.07%. The dividend yield is small at around 1.3% spread over 4 payments a year. I've also added more to Diageo as its share price is depressed, and I see it as a bargain, and I just couldn't resist snapping up a few more shares in Croda, as it's almost 40% cheaper than at the start of the year, and I believe it will recover over the long term. And finally, that new company I've bought. I'm a fan of UK large caps with powerful economic moats. These are companies which are virtual monopolies. The new company I've bought into is the London Stock Exchange Group, which is in the financial services sector. The shares are up 15% this year. The dividends are fairly modest at 1.5%, but the company grows the dividends over time, as you can see from this graph. Why not subscribe to the channel to see what I'll be buying next? To see other companies which have economic moats, then click this video here. And to see my entire share portfolio, then click this video here.